And joining me now from Lewis, Delaware for more on this is Eddie Ghabour. He's a co-founder and CEO at Key Advisors Wealth Management. Eddie, it's great to have you on the show. And you joined us just a few weeks ago, noting, of course, that this tariff policy seems very real from the Trump administration. What is the latest in your take in the wake of some of the updates that we've seen of late?
I think one of the biggest things right now is the uncertainty that's in the marketplace. When you look at CEO sentiment, small business sentiment, some really depressed levels that we haven't seen since COVID or the GFC. And that's really because of the uncertainty that no one really knows what's going to happen in regards to tariffs. I think we're going to have some tariffs. Of course, President Trump ran on that, and he continues to stick with that. But until we have clarity on exactly what that's going to look like, this is a very dangerous market to be fully invested in. We are in full-blown defense right now, especially after the last couple of years investors have had. I think it's prudent to kind of wait and watch and see how things unfold. So I don't think the worst is over yet for the markets. I expect us to test the lows and possibly just be range bound, but then just be ready for surprises, and that's going to start happening here in this earnings season. I think this earnings season, the most important thing is not what they just happened, but what the guidance is going forward, because the game has changed.
Yeah. So in terms of what we hear from these chief executives, Eddie, anything in particular as it relates to guidance and tariffs that you think would be helpful for the markets?
If they just know exactly what the tariffs are going to be, these CEOs are some of the best business people in the world. They'll be able to figure out a way to win in that environment. But you need to know what the set of rules are going to be. And look, you saw a company like Walmart remove forward guidance. I mean, if there's a company that has a pulse on middle America, it's Walmart. And if they have to pull forward guidance, what are the rest of the companies going to do? So it's really a matter of actually just knowing what they are, whether the tariffs are 20%, 10%, or 100%.
Yeah.
Let's find out exactly what they'll be. And I don't think that's going to really unfold here and for the next few months. So I expect the next few months to continue to be extremely volatile.
We've seen some interesting action unfold in the bond market, and that's bond prices dropping, of course, yields rising. They move inversely, prices and yields in the particular bond market. What's behind that?
Well, I think what the bond market is telling us is that inflation is probably going to accelerate in the coming months. And, everyone's been focused on this bear market we've had in stocks here over the last couple of months. The biggest bear market has been in the bond market. I mean, the bonds have been one of the worst asset classes to own on the long-term treasury side for the last few years. We have rotated. We don't own any treasuries. We've actually kind of substituted that with gold. I think that's one of the best places to be, and it beat the S&P last year. This year, it's off to another great start. So I think the bond market is waving a warning flag that we are heading into a stagflationary environment. I think we're in it now, where growth is slowing at a faster pace than the market has priced in, and inflation is not going to go down.
So let me ask you this, Eddie, with that expectation and forecast, do you anticipate that the Fed changes its rate policy?
So the Fed is in a really tough spot, right? Because they have a mandate on inflation. So if inflation doesn't go down and it accelerates, how are they in a position to cut interest rates? Because when you cut interest rates, you cause inflation to accelerate even higher. So we could have a situation where they're going to have to pick between the stock market and inflation, which affects middle America. And I don't know what they're going to choose, but I believe that they're going to be late to cutting because of that dynamic. So if they come in and cut, it's because the capital markets and liquidity have frozen.
It does seem as if, obviously, tariffs are driving a lot of the narrative here, Eddie, as you've been mentioning. What does this mean for gold?
So gold, I think, is just going to continue to make new highs. I don't think it's owned enough. I think it's an under-owned asset. And I think with bonds continuing to be bearish, that people are going to still look for some safe havens. So that money that traditionally people put into bonds in their 60-40 portfolios that just haven't been effective, I think you'll see more and more adopt the same strategy that we have, which is take some of that defensive money that normally was allocated for bonds and rotate into gold. And that should continue to really have gold perform really well. Not to mention it is probably one of the areas of defense that you see money flows go into. So if we get the VIX spike back up into the 40s and 50s, I think you'll see more money flows go to gold.
Interesting. Eddie, we saw a resolution bill pass the House last week. Of course, that is a first step, or a step of many, of course, as President Trump tries to have his agenda unfold, and that would include obviously spending cuts, tax cuts as well. What does that mean for the market? How much of that is on your radar?
So I think tax cuts, whether you agree with them or don't agree with them, are going to be bullish for equity. So that can offset some of the uncertainty. And I think strategically they would love to see that, where they can stay with the tariff plan as well as get the tax cuts and try to have some of the tax cuts minimize the impact of tariffs. But nothing is easy in D.C. in regards to getting consensus to pass the bill. So again, I think we're probably several weeks out before we get that, and that adds even more uncertainty. So if we can get certainty on taxes, certainty on tariffs, I think we're off to the races. And so I do think we will get a V-shaped recovery. But I don't think the worst is over yet on the downside. So we're looking to the back half of this year where we'll get certainty on both of those areas, and that's when we potentially see that V-shaped bottom form.
Interesting. Eddie, in terms of Congress and its powers, would you like to see Congress do more when it comes to tariff policy?
So, I think, again, it comes down to exactly what that is going to look like. I think it's too early for anyone to say whether this tariff policy is going to be a disaster or a home run. At the end of the day, what's interesting is NVIDIA just announced that they're now going to invest a lot of money here in the U.S. to start manufacturing chips here in the U.S. Is that because of the tariff policy? And if it is, you can make an argument that that is working here. So it's still really early innings before
Eddie,
we determine whether or not this works.
Thank you so much for joining. Eddie's a co-founder and CEO at Key Advisors Wealth Management. We do need to head to the boardroom. Of course, Caterpillar preparing for its opening bell. Eddie, thank you. Let's take a listen.
Thank you.